Hi, this is a strategy to trade gold XAUSD, and this involves some moving averages. We have 5 linear weighted moving average. We have 13 exponential moving average, black color. We have 5 linear weighted, red color. We have 11 exponential moving average as gold color, and we have 9 exponential moving average, blue color. Then we have 7 exponential magenta color. Then on the indicator window 1, we have RSI 14, Dutch blue. Levels we have 40, 60, 260, 38, black color. So how does this strategy work? Normally when the red moving average crosses all other moving averages on the main window, at this point of cross is a buy signal. Now this candle, this candle that closes above all moving averages at the very point of cross is a signal candle, and the closing price is your entry to buy. Now the lowest of the low, this is the lowest wick, is lower than this, so this will be your stop loss. Stop loss will be here. Stop loss to entry, closing price of the candle at the point of crossover of the 5 linear weights above all other moving averages. Closing price is your entry to stop loss. The same distance will be your take profit as strategy for entry 1. Now entry 2 is when there's a crossover. You have the first candle lapping above all moving averages. This is the first candle lapping above all moving averages, and it closes here. There's a second candle, bullish candle, closing here, and this is the third candle closing above all moving averages. You must have a crossover of the candles above all moving averages. You start counting for the first candle that closes above, followed by the second bullish and the third bullish candle. The point of this closing price of the third bullish candle is your entry for the second entry strategy. So this is your entry. Now this particular lapping candle, the low of the lapping candle, is your stop loss. Alright, so entry to stop loss, the same distance will be your take profit. Entry to stop loss, the same distance is going to be your take profit, which will be somewhere around here. That's for strategy 2. So if the take profit of strategy 2 is at 4106.069, then the take profit of strategy 1 is from low to here, the distance, and this low to this closing candle, bullish candle, closing bullish candle at the point of crossover of 5 linear with above all moving averages, this closing price. Now the distance is going to be your take profit. Same distance, it's going to be your take profit, and this take profit 1 for strategy 1. That's 4104.630, and this take profit 2 for strategy 2. Now stop loss 1 is here, for strategy 1 is here. Stop loss 2 for strategy 2. This is the first candle to lap and then close above all moving averages. So the low of that candle is your stop loss 2 for strategy 2. Your stop loss for strategy 2. So the same applies for when price progresses. At the point of price progressing, you cannot apply strategy 1 because there is no crossover. The red line is bouncing above all moving averages, indicating bullish trend. So you can apply strategy 1 here. There is no crossover here. But you can apply strategy 2 in the sense that you have the red candle closing below all moving averages. Then you have another fresh bullish candle closing above. Then count 1, 2, 3. 3 successive bullish candles. Disregard the bearish candle in between. Look at 3 successive bullish candles. 1, 2, 3, starting with a lapping candle. 1, 2, 3. So this will be your entry. The low of the lapping candle is going to be your stop loss. So from stop loss to entry, the same distance is going to be your take profit, which is around here. The stop loss is here, the take profit will be here. So that's for bullish scenario. Do not forget, in as much as the red moving average, linear weight, 5 linear weight moving average above, bouncing above, trend is still bullish. You can only apply strategy 2. You can apply strategy 1. But where you have red line cross down below all moving averages and then cross up subsequently, then you can apply strategy 1 in this scenario, where the low will be a low or your stop loss, and the point of crossing the bullish candle, closing price of the bullish candle at the point of crossing will be your entry. So from low to entry, you measure the same distance for your take profit. And same thing applies to bearish scenario. This is the point of crossing, and these are our closing candle. These are candle for the bearish scenario with the closing price. So measuring from using strategy 1, the high to the closing price. Moving from that, these are entry to sell, and this will be our take profit using strategy 1. And then using strategy 2, this is the first lapping candle below all moving averages. Second, third. Now, as this is the third candle, this will be your entry for strategy 2. This is the high, which is a stop loss. From stop loss to entry, the distance from stop loss to entry, that will be your take profit, which is somewhere around here. So in as much as the red moving average, linear weight moving average is still bouncing below all moving averages, then the trend is still bearish on the 1 minute time frame. We are on the 1 minute time frame. So there are 2 strategies, in this particular video. Strategy 1, from low to entry. At the entry is at the point of cross of the red moving average. The closing candle of that cross point is your entry. Measure the same distance for take profit for strategy 1. Strategy 2 is when you see price, developing below and then suddenly cross above. The first candle to lap and cross above, that will be your starting point, which is close 1, followed by close 2, followed by close 3. Look for 3 successive following bullish candles. So the third closing candle above, regardless of if there's any bearish in between, the third closing candle is your entry by the low of this lapping candle that first that closes first above all moving average, the low will be your stop loss. Measure from there, and then your take profit is at the same distance. And the same applies for bearish scenario. Now, in the bearish scenario, we have price dropping around the up to this point, then we see a reversal. So we can also low to the point of crossover, but we do not have crossover of the red linear weight, 5 linear weight movement. We do not have crossover, proper crossover. Until we have a proper crossover before we start to measure low to entry, then we have take profit. But since we do not have a proper crossover, we might just ignore this signal, not confirmed. And strategy 2 is did not even develop for us to have bearish scenario here. But rather, let's look at, we have a lapping candle and price is still bearish. So we might apply strategy 2 again here, which is this is the first closing candle. I'm not sure if this is a bearish candle. It's a particular doji. It's a doji. Let's see, 410.1.222 or 101.23. So this is a bullish candle, not a bearish. So this 1, 2, we do not have the third closing red candle, so we cannot take any signal from here. But rather, the only sure signal or possible signal is this for strategy 2 in a sell condition. Now for strategy 1, we have the low here, and this is the candle that shows the crossing of the red linear weight movement. So our entry will be at this point, and our take profit will be from here to here. If we are buying, our entry will be here, take profit will be there. Stop loss will be at the low for strategy 1. For strategy 2, this candle did not close above all moving averages. So this is the first candle to close above all moving averages. We might need to wait for one, then another one, making 3. Then the third one will be our entry. But for now, we have just 2. This particular new candle closes as a bullish. Then we have our entry, and then we measure from entry to stop loss. This will be our stop loss. Now, if indicator to use indicator window 1, when the RSI drops from above all levels to below all levels, then you have a sell signal. And then when it rises from below all levels to above all levels, then you have a buy signal. Okay, so from here to here is a buy, from low to above, from below to above is a buy signal. And we can see the candles formation here, indicating momentum is bullish. And from above dropping to below and clearly below it, we do not see a clear below here. If I remove the shade, we do not have a clear drop below, but rather we have a bounce between 40 and 38. It didn't drop clearly below 38. So that's why we can see that selling dropped here and then continue. So that's the video. See you in the next video.